It's been 1 week since a global sell-off rocked investors, and some Wall Street firms are not convinced the worst is over. Raymond James and Cantor Fitzgerald say investors should expect more volatility. Canaccord says the correction has more room to run, but UBS calls it a favorable backdrop for equities. Well, joining us now is Afsaneh Beschloss, RockCreek Group Founder and CEO. It's so good to have you back on. Welcome.
Great to see you. Thank you.
So I'll start right there. We saw the unwind of the yen carry trade last week. We've seen some fears about economic growth slowing and a jump in the unemployment rate. How do you see this market?
I think we had the technical changes last week, but we also had sentiment shift last week with what was going on in our own markets that really quickly spread through Asia, through Europe, and across the globe. We also saw the corrections, but as we've seen today, things are still a little bit softer. And I think what is going on is on the inflation front, certainly inflation is slowing down. We're seeing all the indicators. And our guess is that the Fed might have been slightly behind and might jump in with more likely a 50 basis point cut in the next cycle and potentially another 25 basis points before year end. Unemployment also is shifting, and we are seeing both white collar and hourly wage earners being affected sort of a little bit negatively, and that could continue. However, I think what is going on at the same time is we don't see a recession per se. We're seeing much more a scenario of soft landing.
Okay.
Some people in the administration call it a feather landing.
A feather landing. Is that just synonymous with soft landing, or does that...
It's softer than soft.
Softer than soft. Okay. So in light of that, then, what does it actually take for the Fed to get to 50 basis points in September? Because this is the great market debate right now, and whether it's going to take more deterioration within the economic data or whether it's just the Fed behind the ball.
Obviously, the numbers that are coming out this week will be very important. We've seen a lot of earning numbers last week, but we'll see things that are more consumer related, like Walmart this week. We also are going to have inflation numbers come out and other numbers that will come out this week. And I think that will obviously have a big impact. You have a Jackson Hole meeting coming up. Again, I think the Fed does not want to make the same mistake last time, being behind on the other side. And this time round, if you're seeing signs of softening in the economy, given how high the rates are, and given that there are other measures they're taking that is still shrinking the size of the total economy, I think it's likely that they would start reducing this September.
Okay, so if we shift from monetary policy to fiscal policy, you're starting to see that volatility associated with the election inject itself into the markets here. You've got the Democratic National Convention next week as well. You've been doing a lot of work gaming out election outcomes. What are you finding?
It's really interesting. Obviously, I think people start focusing on the election after Labor Day and after the convention. But what we're seeing is this big shift that is happening even before Vice President Harris has come out with her economic policies. We saw a very, very positive sentiment shift in terms of the economy that has just been happening in the last week without much action. And our expectation is that she will be most likely more business friendly and reaching out to broader groups of business, not just Wall Street, but also small businesses, medium-sized businesses, which will be potentially positive for growth. Also, if that it's an administration that is likely to start executing on some of the things related, let's say, to the IRA, like permitting, which is executing on permits so that a lot of the projects, whether they're about clean energy or other sectors, can move forward, will be very important. And you've seen with Governor Walz that he was relatively early in this area in Minnesota. So I think those are things that are going to be very positive for the economy. Also, an economy that is more pro-labor is likely to ensure that wages stay higher, which means that there will be higher consumption, hence growth in the economy. That's the positive, obviously. Plus rule of law, which I think is frankly the most important if we want to have internal capital flows into our markets and foreign flows, international flows into the U.S. You need rule of law, and you need Fed being independent is very, very important. And those are things that are going to be things that you don't think about, I think, with a Democratic decision.